Welcome, one and all, to the April edition of the Trading Psychology Masterclass. As mentioned in the announcements channel, this is going to be something that we run each month from here on in. The reason for that being twofold. The first reason being that we got such incredibly positive feedback the first couple of these sessions that we did. We decided that we were going to, be the good Discord managers that we are, and we were going to run more of these sessions for all of y'all. And just secondly, I just think it's important. I mean, one of the big things that we always practice is, risk management, psychological management, emotional management, and I think that it's probably in keeping with that ethos to try and run a more dedicated session at least once a month that we can kind of drill down into it a little bit more. Get some feedback from you guys. What are you encountering? What are your difficulties? What do you need help with? How do you manage your fear? How do you manage your tilt? How do you control your emotions, et cetera, et cetera? There's just so many topics to cover on this, and it is an important topic in trading. So we're going to be running these sessions once a month from now on. The first session was supposed to take place last week, but we had Perdu had something on IRL, so we had to postpone. But we are live. So today is the April session. And yeah, we're going to kick things off. The format of these sessions will kind of figure things out as we go along. But the general format is that Osbrah and Perdu will be taking the lead, and I'll be quietly taking notes from the back of the class. I want to also stress that this is an interactive session, so we're going to maybe talk through some things at the start of the session, but then I also want to give some time at the end of the session to Q&As, and that goes for the entirety of the hour as well. If you guys have any questions about any of the topics we're discussing, or if you want further clarity or clarification on any of the topics that we're talking through, please, please, please ask in the chat. I want this to be as collaborative an experience as possible, and for that reason I want you guys to row in when you want. So that means questions, clarifications, comments, queries, anything you want, please fire them into the chat. So with that in mind, we're going to kick things off today. Again, thank you for joining us, and yeah, let's take it away, boys.
Yes. Well, I think we're gonna break things down in three separate topics. I think the most common mistake of traders that, especially in my mentorship classes that I see, is that people don't have a system. And you think, what is that? What has that to do with psychology? But I think it's one of the main reasons that a lot of people are not confident in their trading system. Is because they lack a system. They are trading on borrowed trust, like like they're following one of the analysts, for example. And I think that that's one of the reasons that a lot of people um, have that final 10% of emotions that they can't keep in check, because they are not having a system they can rely on. And that's basically very important. It's the same in any sports. For example, tennis. If you don't have a strategy to know what your opponent is doing and how to win the game, you're not going to be winning the game, basically because you don't have the system and the tools to work with. So I think that's a key area we're going to touch on. Another topic we're going to discuss is fear tilt, and avoiding self-sabotage. Basically, being in a trade, how to exit a trade, what has your mentality to do with being in a trade, in a losing trade or in a winning trade, how to keep that in check. I think that's a very important topic, and a lot of people that are getting chopped up for the last few months, I see losing their mind and their confidence. So I think that's going to be a really important topic to touch on, why we have fear, why we have tilt, and how to deal with these type of situations. The final topic we're going to discuss this masterclass is how to be emotionally stable, how you manage your emotions, and risk discipline. So these are the three topics that we will combine, and I think it's really important to tap in all of these categories to have a refined and right mentality in trading. So yeah, I want to kick things off with Osbrah. Um, I'm really curious which psychological mistake uh, did cost you the most money, for example. I think we can put this into practical situations for now, and then I
Yeah.
tell mine.
Yeah, definitely. So on my end, so it's gonna be personal experience. What has costed me the lot was the tilt, and this is why I wanted to talk mostly about this topic during this session. The tilt can be like the cause of multiple things, but can be also caused by multiple things. It can be tied to like exhaustion, so cognitive fatigue in trading, because we're not talking about physical exhaustion, of course. Well, sometimes can happen though. Psychological drawdowns that are tied to the loss, like to be in a losing streak when you're in a losing streak. Sorry. So yeah, what costed me the lot in my experience was when I was in a losing streak and I started to be extremely stressed, like very, very stressed. I remember it's something I will probably never forget because the feeling was really overwhelming. I was in a losing streak and I went to bed with trades opened and I was really scared because basically I was doing a martingale and I was trying to make it back in one trade, you know. So obviously I risked way too much and I went to bed with a position I was not comfortable with at all. And I woke up and I saw the trade in red and I was shaking, like literally shaking in bed. So this is like a common mistake. I think a lot of people are doing it. You're in a losing streak and you're starting to lose control because emotions are taking control over your rational thinking, and you're starting to get overwhelmed, and you take the most like shitty decisions ever.
Yep.
So I know it's quite difficult to do it, otherwise you wouldn't do it, but it's most likely something that will come with experience. But we are here to share that experience with you guys, with everyone willing to listen and to avoid making these mistakes. Even though I do believe you're going to make these mistakes, because I do think, and I would gladly I would like to know what my fellow colleagues think about it, but I think you can only learn if you do the mistakes by yourself. Otherwise, you don't know what it means to be in these situations, and you don't really know how to overcome them. So, yeah, what I want to insist on is that even when you're in a losing streak, you should always stick to a plan, and you also need, especially when you're a beginner, some reminders, and you can get the reminders absolutely everywhere. Like for myself, because the point is to that everyone here will share like his personal experience, but I had my screen full of small piece of papers glued to the screen. So every time I was in a situation I couldn't control anymore, then I had my reminders, because in trading, like you most of the time quite alone, and nobody will like come into the office and say, hey bro, you should chill out, you should take a break, don't forget to put your stop loss, things like that. So if you need pieces of paper on your screen, just do it. If you need like an alarm on your phone to tell you to take a break from being on the computer or whatever, just do it, and that will greatly help to avoid the mistakes.
Yeah.
Another thing, and that helped me a lot, especially the last few months when the market conditions have been really difficult for some, and for myself included. It was to have a hobby. It's going to be personal once again, but in
Right.
in 2025, I stopped going to the gym. I stopped going out. I was like focused on work. I was like fully dedicated to work, to trading, to the streams, trying to grow my community. So I lost a lot of hobbies. Um, like let me develop.
Yeah. Yeah.
Let me
No.
develop. Let me
I was.
develop. Like I mean, and it's also like something that a lot of people experience. You started to get obsessed with trading, and as you all know, I've been in this industry for years, and even after years, it happened to me during the start of 2025 for like a couple reasons. But still, I stopped going out. I didn't train. Didn't go to the gym. I started to get like fat and stuff like that. So I was just glued to the screen. And something that helped, I got out of this situation. I managed to get out, and something that helped me a lot was to just like have stuff that could just make me think about something else that trading and like keep me busy. And there is no shame. Like it can be something as stupid as playing chess, as I saw in the chat. It can be playing whatever video games you like. It can be just doing like a walk outside, or if you want to do push-ups on the floor just to take a small break. Yeah, playing with yourself. If you can last like a couple hours playing with yourself, perfect. On my end, it will just like keep me busy for 5 minutes, so it's not really worth it.
Yeah.
Uh, so yeah, I prefer to like play some League of Legends. At least I have 30 minutes busy. But yeah, like play. I was gonna say play with yourself. Now find yourself like an occupation that keep you away from
Yeah, definitely.
the
Yeah.
charts, because it will just you will have like a mental break. You will just disconnect from the charts, and it can be for a few days. Something also that I learned the hard way is that you never miss making money. Why people always want to be in front of the charts, and why they always want to be in a trade, and it's something like Follis and Perry will develop as well. But it's because they think if they're not in a trade, they're missing opportunity to make money. But we don't necessarily think, and this is how the brain is made. You don't think about, okay, but if I am in a trade, if I force to be in a trade, it's also an opportunity to lose money, because your brain will always think about the potential gains first, and not about the potential losses. That's something that is very important. So yeah, just go to the gym, do like a gaming session, go outside, just walk. Sometimes I just go to the shop. I don't need anything, but I need a break, and I just go to the shop. It can be also like a couple days. Obviously, don't stay in the shop for a couple days. It's not going to end well. But just stay away from the charts, and having mental resets is extremely important to last as a trader, not as a player, but as a trader, as they're saying this properly. It's very important to have like mental resets, guys. So feel free, even if it means not chatting in the crypto chat for like 2 or 3 days. It's fine. The most important is that you feel good when you're in front of the charts, because trading is already waiting a lot on the mind. It's already quite exhausting. So if you need a break, just guys take it.
Yeah, yeah. Yeah, that's a good point. I for myself, whenever I came back from holidays, I always have the best winning streaks, you know. When the mind is at ease, even when I do stuff like, yeah, I'm sounding a bit boomer now, but like stuff like breath work or yoga or anything, or working out for some people, my mind gets way more clear. And it's the same with stuff like alcohol and stuff, you know. Whenever I had a big weekend, you can't focus and your emotions are not in check just because you're tired, or that's why I always say to people that you always need to have enough rest, because being restless in trading will just blur your mind. And I think that's one of the common mistakes I made. Like when I'm pushing a winning streak, I want to stay up all night and push that winning streak, while the next day or the day after it becomes blurry, and yeah, you'll start losing just because you're not sharp anymore. So I think that's a super important topic, definitely, to touch on, that good sleep, good focus, also means less stress, you know. And that's what it is nowadays as well. Like day traders want to be in a position every day because they think they will lose money if they don't. While the most profitable traders that I know or that I read, from like Mark Douglas or Jesse Livermore, or traders nowadays like Don Alt, they're like higher time frame swing traders, and they only trade around pivotal levels. And yeah, I think for a lot of people that play with small capital, it's super difficult to get your mind off the chart because you feel the urge that you have to be in a trade every day. While usually that's not the way how you become profitable. It's super important to keep your emotions in check, and whenever you don't see a trade, you just log off. And not being in a trade is also a trade on itself. And that's what we discussed the first stream as well, that you don't have to feel obliged to be in a trade, that you come home and your wife or your girlfriend or whatever you come home to says, yeah, how was your day? And you say, yeah, not much. I didn't trade all day. It sometimes feels like you haven't done anything. And that's the whole psychology thing behind trading, that sometimes doing nothing is the perfect thing to do. And that's something you have to switch in your mind, that's also a trading day. Sometimes you don't see a trade, like today I didn't see any trade, and I feel happy, comfortable not being in a trade. Yeah, it is how it is.
Yeah,
But
also not. Oh, sorry, go on.
I'm really curious about Follis, because he's the most
Oh, yeah.
um, clear-headed person in the room, the boss of all bosses. How do
I have to
you
be I have to be clear-headed when I'm working with you. We couldn't have two hot heads on the team. It wouldn't work.
That's
So
true though.
so someone
How
needs
do
to
you
be
deal with
calm.
losses? Like, do you ever have losses?
I certainly do. I've had some massive losses in my life. I think that something I posted in the chat actually a few minutes ago was I actually round tripped $100,000 on two coins last year. One of them was Cosmic. It went to literally zero. It rugged.
For that
Went
one.
to yeah. I was like 100. I was up at like 130K on that coin at one point, and it went to zero, and I didn't make any money off it. The other one is Render. I still have my Render bag. I still think it's worth like 20 or 25 grand, but that was worth over 100K at its peak. It was worth nearly 200 grand. And yeah, that also like minus 90% or something from the highs, but it is what it is. I think that like one of the things, and like I remember like telling my friends about those losses, those round trips, and like they were like, "Man, are you okay? Like, are you?" And I was like, "Yeah." Like, I don't know what's wrong with me. Maybe it's just like, I don't know. Maybe it's something broken in my brain. But like, it didn't affect me at all. It didn't like. There was no. I didn't feel bad. I didn't feel tilted. I didn't feel emotional because I guess like one of the things you come to realize in crypto after a while is that you're gonna have some of those shots that play out, and you're gonna have some of those shots that just don't play out. And like the last thing you want to ever do is get too caught up in something that you missed or something that you fumbled because it's going to happen. It's an inevitability if you're in the space long enough that you're going to fumble some bags pretty badly and you're going to have some terrible trades and you're going to have some really dumb moments. But kind of what matters about that is like just really taking the experience and trying to figure out, okay, well, what did I do wrong here? What can I adapt? What can I change? What can I learn from this so that when it comes across along again, I won't make the same mistakes in the future. I think like that's the way you got to be viewing this thing, and it's a point that I've made previously. You know, we're in this game to make fucking generational wealth, right? You guys are all in this game to make fucking money, to make a comfortable life for you and your family and your loved ones, right? And we're all in this game for those reasons. I think that actually, by and large, most people in this chat are not in this game for the surface layer shit, the Lamborghinis, the Rolexes. I think most guys, when you talk to them, they say the things that I'm in the game for. They say, I'm in the game because I want to buy a home for my family. I'm in this game because I want to live a comfortable life and I want to provide for my loved ones. And like those are great reasons to be in crypto. Those are great reasons to work 14 hours a day, 7 days a week, right? But if that's the case, then why are so many people caught up in this short-term gratification? Why are so many people obsessed with daily results, weekly results, right?
Yeah.
Even in some cases, monthly results, right? You need to play a long-term game here. You need to be thinking about things years in advance, decades in advance in some cases, depending on how young you are, right? Like don't be worried about where you are today, tomorrow, next week. Worry about where you're going to be in 3 months from now. Worry about where you're going to be next year. Worry about where you're going to be in 24 months, right? Because that's the edge in this game. That's the psychological edge. It's like, can you play long-term games in this industry that is dominated by short-term thinkers? I think if you can do that, then it makes you, it contextualizes, like as I just said, I suffered those losses. It makes you contextualize those losses like that's just one tiny speed bump in this very, very long journey that we're on all on, right? And one last point I'll make about losses is like, you know, it's funny that I took those two like 6-figure losses and I didn't care at all. But in my trading journey in like 2021, I remember losing 5K, I think it was on Doge. Or no, sorry, it wasn't Doge. It was Zen, Horizon. You know that coin, Zen? Um, I longed like the Pico Schmico top of that coin after it got listed on like Coinbase or something, and I got liquidated straight away, and I lost like 5 grand. And like 5 grand is it's still a lot of money, but at the time that was a huge amount of money for me. Like that was like a big chunk of what I had in crypto, and I lost it because I was so stupid. And afterwards, I cried, man. I cried in my room, right? I was so upset and disappointed and ashamed. You know, I felt sick. I cried. And that was like a real turning point for me because I was like, okay, you know, if this is like the bottom for me, like how do I get better from here? How do I learn from this? And like I've suffered like bigger, like if I lose 5K on a Thursday morning before breakfast now, but it's like the thing that changed for me is that I no longer like when I lose a trade now, I'm always trying to think about it in a positive. Like, what can I learn from this? What can I take away from this? What is the lesson that I'm gonna learn from this loss that is gonna assist me in my 10-year, 15-year journey to make generational wealth, right?
Yeah, that's a good one. Yeah, I think the moment whenever you made good amounts of money and you lost good amounts of money, you kind of get very neutral in your emotions, at least for me, and that's what started to work with building a system for me. Like whenever you took these huge losses and you learn from them and you get better and better in the game, I think that was what made me stay in the game as well. Everybody knows in this chat that I lost a huge amount on an Aptos short like 3 or 4 years ago. It costed me like 45K or so. I don't know how much it was. And I
Wow.
stayed in bed the whole day, the day after. But I think one of these moments, it makes you realize, okay, this is not the way to go, you know? Whenever you blow your account in such an easy manner, I think you learn from them and you move on, and then you think, okay, I have to do something about my risk management because otherwise yeah, this you're not gonna last long, and that's the huge losses and these type of moments. They made me a better trader after all, and yeah, that's that's the only good thing I got from it. And if you trade with $1 or $10, it doesn't matter which amount it is. It's more over that how much money it is for you. That's the most important thing. Like um, the feeling you get in your stomach whenever you lose that feeling you don't want to have anymore, like taking these huge hits. So that's where you learn risk management, and that's one of the biggest parts of the tilt that I don't feel anymore because my risk now is managed, and it's just another point. Like I have a really nice video of Federer talking about like his losses in tennis, and he says, yeah, it's just another point. So I think, yeah, that's the thing that I learned the most of these losses, and you become a better trader after, because I never took such huge losses anymore after that. So yeah.
That's
So
good.
yeah,
I
that's
wanted
good. Yeah.
to I wanted to touch on a point that you mentioned earlier when you said that, for example, you're like you talk with your girlfriend and you're like, "Ah, what did you do today?" Nothing because I didn't take a trade. You know, yeah, that's good. No, I mean that's good, but he's not taking such losses anymore. Sorry, that was a bit blunt, but it's very interesting because this losses really destroyed my soul. No, it was that's good to like he's not taking such losses anymore. That was like targeted to all this sentence. Because not taking a trade doesn't always mean you didn't work or you didn't do nothing, and you shouldn't feel like you did nothing because you didn't trade, because part of trading is also monitoring. it's part of the job. Is to monitor and to remain patient. And I'm using the word patient because it's also something that we're going to talk about. But like you said, you talked about like a tennisman or whatever, it's football player or whatever. The job is not always to just be on the pitch outside. You like there are like more, maybe like some football players are bored because when they are training and they prefer to be playing a Champions League game than being just training with like teammates. And it's the same with trading. Trading doesn't mean being in a trade 24/7 or taking trades. You can just spend the day monitoring the news. It's also quite exhausting to monitor everything. If you go outside and ask people, I'm not sure everyone is fully aware of what happened the last 3 weeks. I'm pretty sure as well some people go to the gas station and they don't even understand why the prices increased. So you're doing some work, staying up to date, monitoring everything on socials, like trying to understand everything that you see, all the data, all the metrics, etc., etc. So yeah, it's not because you didn't take a trade that you like didn't do nothing during the day or that you didn't work. So don't worry, guys. Yeah, you're monitoring the situation. You're not homeless. You're not like a jobless. You're monitoring the situation. Exactly.
For
Um,
example, Osbrah, do you still like what you're doing now with your trades? If you enter a trade in the tracker, for example, yeah,
yeah.
do you set like a set target and a set stop loss and forget about it? While we're at desk 8 hours a day, you know? What's like while you're being in a trade next to your hobby, are you still looking at your phone every time, like if it's moving or not, or you just set it and forget about it?
No, I think about it when my stop loss is not at entry, because I'm quite bothered to know that I still have like money on the table. Even I'm not really stressed, but I think about it.
Yeah,
That there is a nuance, but so I still think about it. Even if I'm doing something else, I think about it. I'm not gonna be glued to my phone, but I will check the phone from time to time, just to see what the price is doing.
yeah,
Um, and but once I get my stop loss to entry and the trade is risk free, I just don't care anymore. I just set alerts, for example, at a partial TP or at my entry, just so I know if I'm out of the trade, and that's it. Beside that, I don't care anymore. Once the trade is risk free, I don't really care anymore. And this is how I managed to stay in a trade at the end of March for like 10 days. I was like, of course, I didn't get obsessed with it like a trade for 10 days. I didn't think about it every day. I just completely forgot about it. I knew I was in a trade, but I just I was just like, whatever happens, it happens. My risk is managed. I cannot lose. If I win, it's a bonus. And this is how I see things. Of course, I'm
yeah.
clicking on tab now that I am in a new trade. I check the price action, but once I have my alerts at a certain level to know when I'm going to go break even. I don't go break even randomly. Before I take the trade, I know when I'm going to go break even. So I just have an alert here. Maybe it can be like some tips for people not
Yeah.
who doesn't really know when to go break even.
So
For
so
example, if yeah,
so
go
you
go
always
ahead.
have like a predefined risk.
Yes.
Do you and like do you have some other rules that you have, like stop trading after three losses or max trades per session, or do you have anything written out for yourself to keep your emotions in
Yeah.
check? Because I have a whole list before I enter a trade. When I'm in a trade, I have a list as well because I'm quite an emotional guy, so I have to keep my emotions in check whenever I'm in a trade, you know. So whenever I see it go like 3 or 4% for my entry, I have to go to my checklist, my in a trade checklist is what I call it. Like, did the trade change? Why do you move your stop loss break even? And if I can't answer these questions, I'll just stick to the trade and to the idea I have, because otherwise, I intended to close pretty early always. Like, do you have such lists as well?
Yeah, like for example, when I do take the trades, I have the same set risk, but as I said, I know when to go break even. For example, if I take a trade on lower time frame, I will look at a low that would create a break of structure. So I just set an alert slightly below the low, and once the alert is triggered, I just go break even. Because it makes sense to me that if we are breaking the structure, for example, if I'm in the short and we break the structure to the downside, and we start to have like a bearish price action, then the logic would want to that we like don't revisit the entry. So I just go break even. That's the first thing. And I forgot what was the other one. I wanted to say something, but I forgot. It will just come back. I think I got like distracted with the
Yeah, with the
the
price
tree
action.
capital, but yeah, with the
We're all
price
like,
action.
what did I say again? Because Bitcoin
Yeah,
is
with the
pumping
bot.
above 72K. It's
Yeah,
always when we're
with the bot.
streaming, huh? It's always when we're
Yeah,
streaming.
exactly.
No, yeah,
Always.
I do have I have some rules as well, of course, like stop trading after 3 losses. Whenever I
Yeah,
have a losing
that
day,
was it. Yeah.
whenever I have a losing day, I usually take the day off the next day as well if I have like a huge losing day. But usually when I have winning streaks, what I see in my journal, they're all clustered together as well. So that's why I want to really push whenever, like last year, April, I think it's going to be the same this April because I already have that feeling in my books. Last week was like I was winning only. So usually when the momentum is on my side, and my emotions are in check, like I'm super vivid in the brain at the moment, then I know when to push it. So I think that's super important to touch on as well, because these winning streaks and losing streaks are really clustered together, and I think that all has to do with the psychology as well, behind if you have like enough sleep, if you have enough headspace to trade, you can see the charts clearly. So yeah, I think that's really important.
Yeah. Same for me. But it's more like, yeah, after 2, 3 losses, usually I just take like a break. I stop trading for the day, that's for sure. The next day, also most of the time, I just try to, as I said, to reset the mind, and then I come back when my mind is fresh. And also, the thing is, you just let 24 hours, 48 hours go by, and then the price action will also develop, and it will also help you to have a bit more clarity. So it's good because the price action has developed, but it's also good for the mind that is like reset, and you can see the chart with like a better standing point. So that's also important to set
Yeah,
rules.
definitely. Yeah.
It can be after 2 losses, can be after 3. Of course, like I don't recommend to set your rules like after 10 losses, I stop trading for the day. Just like set fixed amount, but like keep it low to avoid uh, cascade and bad situations. So yeah, that's how I do. Curious to know about Follis, maybe
Yeah, yeah. Follis. Do you have any
getting
rules,
burned.
or it's just a gut feeling?
Well, I would say, well,
Ball
I mean,
tingling.
you joke, but I think that I'm more of a discretion trader than a lot of traders I speak to, and that's not to say that I don't have systems, but like for instance, I don't necessarily I usually stop trading after a few losses, but it's not because of emotional tilt. I think that I could probably take quite a few losses before we get in any way tilted. Normally, however, that's an indication to me that my read on the market is incorrect. Like for instance, a lot of the you guys know me, a lot of the trades that I take are based on ranges, and I like to really only trade from the range extremes. And a lot of the time, that means like you're either fading a pump towards range high, or you're trying to quote unquote knife catch as price move towards the range low. Now that those trades are often some of the best because you're really catching an inflection point in the market. But a lot of the time, like that pump towards range high will just keep going, and you'll get caught on the wrong side of the move. So in those instances, like I'll stop trading if I try a short. If BTC pumps to range high and I short it 3 times and I take 3 Ls, I'll probably stop trading. But it's usually because like I'm on the wrong side of the market, and my bias is incorrect. That's not to say necessarily that I'm tilted. That's just the cost of doing business. And I think that my lifetime win rate is in around 40%. So I know that anytime I enter trade, there's like a 6 out of 10 chance, statistically speaking, that I'm going to get stopped out. So I'm aware of that. I don't really get tilted by taking losses, but in those circumstances, I would stop trading because manifestly my read on the market is incorrect.
Yeah, that's a good point. Yeah, I have the same. Like, if you see, in January we were in a very big downtrend, and I took some heavy losses there. Not heavy, but in my books I took some losses. And in February I just cut my trades into half because I saw that it wasn't my environment. Like the both of you are super well in range trading, and I'm more of a momentum trader. When there's a good narrative or when there's fundamentally strong projects launching, I can push things really easily. So then I just cut my risk into half, and I know when to push the buttons, and yeah, I don't get really distracted by the price action if I know when the momentum isn't on my side.
So, I mean, that's a question for you because, like, especially in the last few months, we've had just a ton of range-bound, choppy price action, and it has been mostly downtrending. The high time frame structure has been to the downside since like the start of October. So, I'm curious to know, like, at what point do you? Because surely you must recognize that, like, this isn't the trading conditions that you really like and that you really print in. So at what point does something kick in and say, okay, like this is going to frustrate me. This isn't exactly what I want to see. I need to de-risk here. I need to maybe sit on my hands a little bit more. Like, what do you need to see in the chart for that to happen? Or like, I guess a more practical example is like, when did that start happening over the last few months?
Yeah, I meant just like Osbrah mentioned, I have some really great hobbies as well. And in January, February, I just went on a few holidays, spending my time with my loved ones, keeping the group still active, but less trading in February compared to January, only taking A plus setups. Because you still have, in 1 month, you always have 3 or 4 coins that are showing strength, that have a great narrative, and then it dies because we're in a downtrend. But you always have these small narratives, and that's where I make my money out of, because like the broader trend was to the downside, of course, but you still have these trending days on altcoins where you can find good momentum for a 4 or 5% move. So yeah, that's it's an interesting topic, of course. Could have played it better, yes, of course. um, do I really care about that I didn't play it perfectly to the downside? No, I think it's, for now, April and May, I think historically are super bullish. And for me now, it's really easy because I haven't been using my bear goggles, and I haven't been bearish on the broader market. It's really easy for me to turn bullish again because I've been pretty neutral in January, February. So it's really easy for me when the trend starts turning, what we're seeing at the moment, it's really easy for me to pick it up. I think the most common mistake of traders in general is that they don't switch bias easily. So whenever you're in a downtrend, I like to take my hands off for a bit and just wait a bit until the range resolves. And I think that's why I can push it in April and May, for example. You always have like 3 or 4 months in crypto where the momentum is super bullish, and that's where I make most of my money. And actually, I just should go on holiday the remainder of the year. But yeah, I think it's really easy for me to now push it, push my numbers up, and my mentality is like really clear at the moment, and I haven't been super bearish in January, February, what maybe was a big mistake. But now I'm not in the need of switching my bias to being bullish, because I've always been pretty neutral slash bullish. It sounds a bit weird, right? But it's easy to be yeah, it's easy for me to remain bullish now because the trend is turning, and a lot of people, I think 90% of the group is still super bearish. And I think when we're trading against 75, 76K, that's the moment when a lot of people turn bullish again, and that's where we have to risk off. I think it's a good moment to be bullish now. So yeah, It's for me easy to that I don't have to change my mindset here.
Makes
So
sense. Makes
yeah,
sense. Will we move on to the
yeah,
next topic?
yeah. The emotional regulation for a lot of people. I think that's something you can touch on, Follis. Like, what did you improve as a trader over the last few years with keeping your emotion checked? Did you remove some things in your system that makes you a better trader now, or what's the? I know a lot of members, they want to see more of you as a trader. What I've heard. Do you think you can be like a day trader at heart again, or you're too busy for it at the
No,
moment?
I'm moving away. I'm like I'm like that mission they just sent to the moon. I'm just getting further and further away from Earth. Yeah, the unfortunate reality of only having 24 hours in the day is that yeah, you don't have time to do much scalping. But yes, that's the joys of building a business. I think that something that has helped me massively is confidence in my system. I know I just said that I'm more of a discretionary trader and that I rely less on my systems, but that all comes from having a system that you have confidence in, right? Because as we all know, it's the same with like, price action rules. The more you understand about the rules, the more you know when you can bend those rules and sometimes even break those rules. The same goes with having a system that you trust, that you have confidence in. The more you trust that system, the more you can bend and break the rules of that system, the more you can kind of flex how rigidly you apply that system to your own trading. But I think that it all comes down to something that I speak about a lot, which is chart time. Um, and this is like a broader point about, I guess, like trading ability, technical, analytical ability. A lot of guys, and it's funny that I'm saying this on a psychology masterclass. A lot of guys will say like, "Oh, psychology is everything. It's you need to be like, you need to focus on psychology. Like you should be your main focus as soon as you start trading." And I always say, no, that should not be your main focus. Your main focus should be like learning how to trade, like learning how to read a chart, like learning how to execute a trade, learning how to manage your risk. Once those are all locked in place, and I don't know why my Mac does that. Once all of those are locked into place and you have a good foundation, then you can start building on it and refining it with good psychological management, good emotional management. And I think that once you have the confidence in your own system, once you understand like things like win rate, profitability, what it means to take a loss within the context of a profitable system, right? What you should be looking for in a chart. Once you understand those things, it's very easy to kind of take a loss and just move on from it very quickly, right? I think that a lot of the problem that people have with losses is that they don't understand how losses function in a winning system. They don't understand how losses function in a profitable system, right? And this is something you mentioned. Not Jesse Livermore, Mark Douglas, who wrote Trading in the Zone. And he always talks about that. When you enter a trade, it's always an uncertain outcome. Even the best traders in the world don't know 100% what the result of a trade is going to be, right? They have to be comfortable with the fact that even the best highest probability A plus setup in the world could be a loss, right? It absolutely could be because there's so much noise, there's so much uncertainty in the markets. You have to account for the fact that any trade you enter can be a loss, right? And I think that that's something that beginner traders really struggle with, right? Um, they make this equivalency between losing and failure, and this is something I've spoken about a number of times before, right? They don't understand that losses are just a necessary cost of running a profitable trading system, right? As I said, I know that my win rate is about 40%, right? My lifetime win rate is around 40%. So I need to be pretty fucking comfortable with losing because about 6 out of every 10 of my trades are going to be losses, right? If I wasn't comfortable with losing, then I would make no money. But I know that 40% win rate is enough for me to make good bank in this market, right? But I need to be comfortable. I need to know that if I get into a trade and it's a loss, that's just one of those 6 out of 10 trades that are going to be losses for me in my system. And I need to be comfortable with those losses in order to execute and to run that system profitably. Now that only comes with time, right? It comes with time. It comes with time spent in the charts, time running your system, time analyzing the markets, time executing trades, right? But after enough of that time, you kind of build to a point where you're confident in your own system, you're confident confident in your own execution, and you fucking understand that the losses that you're taking aren't failures, they're in fact part of a broader success, namely the running of your profitable system.
Yeah, yeah, I agree. And a lot of people also feel like failing if they didn't take a setup during the day, while sometimes there's nothing to do. So yeah, I think that's also a big danger of like watching your P&L go up and down. Um, like your P&L doesn't influence your trade. I mean, you plan the trade beforehand, and your P&L shouldn't influence that. And I think sometimes I'm still very distracted by watching your P&L as well. But I think one of the main things that I did a few months back when I was in a winning streak and I really wanted to push for a higher P&L is like that you don't watch your P&L at all, because you want to set your limits, you set your stop loss, and you know what you can make, you know what you're risking, and watching your P&L think, okay, fuck, I never made this amount of money. You want to grab it off the table. That's how your mind works. They see numbers that they can't comprehend, and they think, okay, I have to lock it in and I have to go for it. And then it's even more painful if eventually your trade goes to your take profit and you say to yourself, see, you see, I'm a fucking loser. I can't even ride a trade for longer than a few days. And that's really the importance of not watching your P&L go up and down. It's just part of the game. Like today as well, I was in a few trades that I opened the last few days. I wanted to swing some lighter and some monad, and this morning monad was a little bit in the red. Um, was I stressed? No, because now it's pumping a lot, and if I closed it for some negative P&L, it would have hurt me a lot because the setup was still there, while the trade was a little bit underwater for me. And now the green candle tells you that it's better to just stick to your plan, because otherwise I would feel a lot of pain. So yeah, anything to add, Osbrah?
No, you said it all, and I was going to say maybe we should move on to the next questions, and we have one starting with Shark here. Do you ever do double risk trades? If you allow me, guys, I will answer first, and it's going to be quite straightforward. Absolutely never. However, I do reduce my risk in half. And when do I do it? After a losing streak, um, most of the time, it's also something a lot of people might experience. You're scared to take a trade, even if the setup is here, and even if you see like like what you're usually looking for taking shape on the chart. But you will just be scared because you took a couple losses. So what I do to help me keep and regain more confidence, I just reduce the risk, and I reduce a lot, and then I take the trade still. So I'm not scared to take another loss because I know the amount is going to be very, very low and not significant. So yeah, it's something that I do, but I never like double or triple the risk.
What I do like sometimes is when something gets really close to my invalidation, I like to add like 0.25 risk or so, I'm not doubling down, but let's say I have a 10K position, I would like to add 2.5K or so. That's usually when it's getting close to invalidation, I like to size up a little bit more. That's something I do like, because the idea is still valid, and if it gets close to your stop loss, um, or whenever, for example, if you buy something for $1 and you want to ride it to 1.2, I can add some at like 1.1 and move my stop loss break even. That's something I do sometimes when the trend is super bullish, especially in bull markets. I like to not double down, but like to add some risk on the way up.
I have definitely risked more than normal before. If I see something I really like I've often spoken about that PO3 continuation setup. It doesn't really happen that often, and really only happens in a bull market on high time frame. But if you get something like that, like we got a few of those on BTC on the run up in 2023. If you get something like that, for me, it would actually be leaving money on the table if I didn't
Yeah.
risk a little bit
Same.
more.
Yeah, same. Scapulit asks, does it work, Perdu? Do you feel like it's worth adding in the end? Yeah, I do actually. Like, for example, with Esther, it turned out that we got wicked out on the bottom, um, but it has been so stable, and that 0.65 level was such a pivotal level for me that I added some over there, and eventually it wicked me out like to the tick. But usually it's pretty nice to add if it goes like closely to your invalidation. Like yeah, I didn't backtest it actually how many times it became a win or a loss, but yeah, for me it helps, and it's always worth it to add a little bit close to your invalidation, because a lot of times your invalidation point is just an inflection point where the trades goes against you. So I don't mind to uh, to add some risk there.
Good one from Jay
We have,
Lucky.
yeah.
Sorry, go on.
No, I was just gonna read Jay Lucky's question, but I
Oh,
leave you
go
the
ahead.
floor. Okay. What percent of pot of cash do you guys risk per trade? Not props. I'm still gonna answer for props. It's quite simple. Anything between 0.5 and 1%. Same when funded, but when it's on a funded account, I tend to stick with a 0.5 instead of 1%, just to keep some room with the drawdown. And when it's not prop, it's usually quite the same, but I can go a little bit more, around 1.5, 2%, but that's quite like rare. It's not most of the trades are like 2% risk trades.
I have a different approach to that, and this is probably a little bit, maybe a little bit on the degen side, but I have spoken about risking as much as 5 or even 10% of my portfolio on trades before, but usually those are more like spot trades or something where I have quite high conviction if it satisfies all my criteria for an A plus setup. Um, I have often spoken about, fixed risk for me implies fixed confidence per setup, which is not the case. Everyone's going to have variable confidence in their setups. And for me, if I get a setup that I really like, I will risk, yeah, sometimes as much as 5, 6, 7, even 10% on something that I really like. But again, like we're just talking about my trading stack here. Like if my trading stack went to 0 tomorrow, my life would not meaningfully change. It would be a kick in the balls for sure, but it's not going to have me homeless begging for money on the street, right? This isn't my net worth we're talking about. This is just what I have in crypto. I even risked Marquise on my render long. The risk I risked Marquise when I decided to go full time crypto, which in in 1 week is 4 years.
Wow, yeah, congrats.
What about you, Perdy?
Um, sorry, what I risk per
What
trade?
about
Yeah,
you?
I
The
like
risk.
like in January, February, I didn't risk almost anything. Like all these scalps and stuff. Like I said in the round table 2 weeks ago, um, I get so tired of a range where you have to take like 1 or 2 or 3% scalps, man. That's not my thing. Whenever we see like a higher time frame breakout, like we're seeing at the moment with BTC, that's where I really like to risk big, like 5 or 10% even per trade on my portfolio. Like I have 2 or 3 core positions that I just really like to build out, and that's also where I add risk on the way up. For example, like lighter, I'm already in a quite a big position on that one, around 1.003 at the moment, so I'm a bit underwater. And when we go to 0.92, I just simply add a few percent. And when we reclaim 1.1, I also add a few percent on what I'm willing to risk. These longer term swings that we usually historically in April or May will come to fruition. That's where I want to risk quite some of my portfolio, like around 5 or 10%. So Hasbira, oh, you changed your name again. It was Hasbullah. Now you abandoned my team. How do you handle risk management around high impact news events? Do you believe the chart can reliably tell you the likely outcome or direction before the news comes out? or do you treat news as essentially random and eliminate risk regardless of your technical setup? Very good question. Um, I usually don't really trade these news events because it's too volatile. Um, that's like my yeah, I don't know. I think Osbrah can tell you a bit more about things like CPI and FOMC. But usually when I'm day trading, I just close my positions. On a day like tomorrow, I close my day trade positions and I just leave my core positions run. But I'm definitely not day trading news events because it cost me more money than it gave me money, I think, in the last few years. What about you, Osbrah?
Um, yeah. So regarding the first part of the question, do you think the chart can tell you reliably the outcome before a news come out? I think today is a good example. The market looked bearish before the news came out, and now it looks absolutely bullish and like it's going to push to 75 or something. So it's quite difficult to use the charts to tell like to guess what news is going to come out. Also, I do think a lot of people were thinking the ceasefire would be breached because of the Lebanon issue. So that's why also some people started to flip bearish on Bitcoin and crypto. And yeah, surprise. I would have not guessed that Netanyahu would be like, "Oh yeah, okay, let's make peace." So that's quite surprising. And also Trump said, "Yeah, I'm urging Israeli Prime Minister to like enter the table of negotiations." So it's quite a surprise. So I don't believe that the charts are telling you like what news are going to pop out. Now, regarding the last part of the question, do you treat news as essentially random? It depends. It depends. We are like it's a war that have serious implications. So I would say no. There is no like random. There are no random news because we're talking about potentially the global stability regarding the energy market that can be completely ruined. So no, I wouldn't say it's random. Now, when we're talking about just the regular news that we have every week, like unemployment claims, etc. Yeah, I would say the impact is minor because it just brings some volatility around the news with the algos and stuff, algos getting triggered, and people trying to trade the volatility. But then the trend usually resumes like an hour or so after. So yeah, it depends. When it's regular news, I would say yes, it's quite random or minor. But when you have a war like we're currently experiencing, then nothing is nothing is random and everything is important, and it's also part of your job to be aware and to follow the news and then to take the right decision, whether it is not to trade or trying to capitalize on the movement brought by the news.
Two great questions there, very much related, so we'll ask them at the same time from Marquise and Shark. The first is, if you were coaching yourselves, what would you tell yourselves to stop doing? The second is there a piece of advice you'd give your younger self that would have sped up your path to profitability? Perdu?
Yeah. I mean, we all came in crypto because we wanted to become rich, and that's also the same thing how I got familiar with crypto. I just blasted my money into spot bags and I thought, this is it. This is how I become rich. And eventually the market humbles you in a way. And that's why I think the psychology part of trading is so, so, so beautiful. And that's why I like also to trade with fundamentals around projects because it's such a beautiful PvP environment where you just have to know how the other participants in the market are thinking. And that's what I learned about myself as well, that I can be very impulsive, and that I can be very energetic, but sometimes the market isn't energetic and you have to sit on your hands, for example, and you have to be humble, and you can't just top last coins when the market is in a downtrend, for example. And that's what I learned about the market, is that it's such a psychological warfare, and that it also makes you see that it's not like a casino where you can gamble your money. So if I have to give any advice to my younger self, is that when I didn't know anything, I had to be way more cautious and way more able to listen to the right people, which is a very difficult path to go because Twitter in bull markets is very toxic. So you always start following the wrong people. So yeah, it made me a lot more humble, and a lot more calm in a way. And now follows things. How could have you been more energetic than that you are at the moment? But I was even worse back in the day when I was younger. So yeah, it really made me a better person. And it sounds crazy, but the dark times have showed me and learned me way more than the beautiful bull market times in the market. So yeah, for you, Osbrah.
It would be the advice I would give to myself would be don't try to go fast and don't try to accelerate the process. And same, it's something I'm pretty sure everyone can relate. Like especially with crypto, maybe not with the stock market, but with crypto, a lot of people join the crypto market thinking they could become rich very, very quickly. Most of them are gone. Usually, these guys just leave forever after like being liquidated once or twice, and then they don't try to trade because what they wanted at the end of the day was to gamble and become like rich without putting in the efforts. And being a trader is completely different. It requires a lot of effort, a lot of resilience, tenacity, all the things that the gamblers don't really have when they join the crypto market.
Basically, yeah.
Yeah, so I would say, yeah, don't try to find like a cheat code that will make you rich quick. And even if it works, most of the time you're going to end up losing everything because you didn't learn what makes people keep the money. Making the money is one thing, keeping the money is something else, and it's probably harder. And in my young experience, I saw a lot of people climbing to the top and going down to the starting point or even lower than the starting point, like ending completely underground faster than ever, you know? So, yeah, one piece of advice, focus on how to keep the gains and not how to make the gains fast as possible.
For you, Follis.
Well, yeah, I just spoke about it in the chat there, but the one bit of advice I would give to myself is to my younger self is to just to focus on price action trading earlier, because that's something that I only got into fairly late. Well, I won't say late, but like for the first year, I just fucked around with so many random trading methodologies. I was like doing GANFAN and Elliott Wave and fucking this and that and everything else, and nothing was clicking. And I was like, huh. And I was literally trying like 50 indicators, and I was signing up to paid groups that were doing 20 different trading styles, and it was really actually damaging. It sent me backwards, and then yeah, change. Yeah, again, fan follows. It all changed, and this is why I always say that Maine was like a pivotal point in my trading career, was because I watched him trade price action, and I was like, oh shit, like market structure, like supply demand, support resistance, like liquidity. This shit makes sense to me. You know, this shit makes a lot of sense to me. And something clicked after that moment, and it was kind of like, what's the word I'm looking for? It was instantaneous process, exponential process from that moment onwards. Yeah, basically that, Shark, basically that. I've seen guys on social media claim that the whole focus on psychology in trading is bullshit, just an excuse for scammers to make people believe. This is literally a tweet that I made like a month ago. They say the only thing that matters is discipline. If you're disciplined enough to respect all the rules of a profitable trading system, you don't need anything else. Thoughts? Well, I have strong thoughts on that, and I've kind of mentioned them before. Psychology is important, right? It's extremely important. But it's like if you can make an analogy to a car, it's like saying that the tires, the tire pressure in a car is important. Of course it is. You can't fucking drive a car without the tires being, having good pressure. You can't. But I don't know why my Mac does that. Of course you can't. But the most important part of a car is like the engine, right? It's like there are orders of importance here. Psychology absolutely important, but first you need to make sure that you have a fucking, you have doors on the car and you have an engine in the car and you have a steering wheel in the car, right? There are a few different things that you need to sort out before you start looking at the psychology. Psychology absolutely important, and if you don't have good psychology, you're not going to be able to turn profit. But like people seem to think that like, yeah, I've been learning how to trade price action for like 2 weeks now, so I think it's time to start focusing on psychology. I'm like, bitch, shut up and just actually learn how to trade first. Trade for 6 months and learn what it feels like to win and lose money, and then really zone into the emotion. And you'll be learning that stuff along the way as well. But like, don't start learning psychological management and like emotional management in your third week learning how to trade when you don't even know what perpetual futures are. You don't even know what support resistance are. You don't even know what funding rates mean. You know what I mean? There's a lot of things you need to figure out before you start getting into psychology. What do you think, Perdu?
Yeah, I agree, of course, yeah. But I think being emotional stable, like a drug addict can't trade, because he's just all over the place and he just is a gambler. I think mindset is a very important part of trading. So I disagree, to be honest. Yeah, you have to read the chart properly, and that's important. But I think being emotional stable is 20%. I'm not agreeing with that. It's only 10%. I think it's a very important part of my system that I've been using, and that's where we can come back to the beginning of this conversation. That of course you first have to build a system, and the final 10 or 20% is that you trust your own system, and that's where the emotional part comes in play, because otherwise you won't make money. They align really well with each other. Yes, you can be a great trader or a great analyst, but executing it without any emotions, that's a really big part of a trade. So I disagree on that one, that emotional stuff is bullshit. I think it's a really big part of executing and finding good setups, because you trust your system, and that's where you have to rely on. Especially with sizing big, if you trade with size, then emotions come and go. Especially when you're not used with trading with size, and became a good trader. Like if you made 100K from 10K, and you're not familiar with these type of numbers, then emotions are very important, in my opinion. So yeah,
Yeah,
I
I
disagree with
do.
that one.
I do agree as well. To keep the car analogy, I would say like the car works. So let's say the car is a system, but if you're like a shitty driver that goes like way above the speed limits, you increase the probabilities to just crash yourself. So it doesn't mean that the car is bad, that the car is shit. No, it's the same car, but if you're a shitty driver, then compared to like someone that drives properly, then like you might just never reach the destination and just fucking crash yourself before you reach the final point. Regarding the other, so I do agree with Perry and Follis. I think to say psychology is not important is like a rookie mistake, and I wouldn't be able to give credit to someone saying something like that. To be honest, that's for a reason that in institutions most of the traders they retire before 40, right? Because it's getting too heavy on the mental. Um, it was a question from Jay Lucky, I guess, the sort of allocation if you don't have expenses. I mean, you're probably saying this because you're a student or something. You probably can afford to spend your money because you don't have a rent or anything to pay. It's not judgment. I'm just guessing your situation. So obviously, if that's the case, then um, it means you're able to take more risk. It means you're young and you can take more risk. So I would say maybe dedicate a bit more to crypto. It doesn't mean go into the meme coins ecosystem or whatever, but you can allocate a bit more to crypto and a smaller portion to like stocks, ETFs, indices. So this is I would do like something like maybe 60-40 or 70-30, just to be fine, you know. And then as the time goes by, then you can just like start to even things out a bit more, because the more your capital grow, and as we said just before, the more you're gonna focus on trying to preserve this capital, and obviously that means reduce the risk that you take with the capital. If you want to add something for this, please go on.
No, I don't. I have very little to say on that. I'm probably the worst person to ask because I have no stock exposure, and I sold all my spot in August except for my render bag, which is pretty fucking big. It was like half my spot exposure previously, but now
Oh
it's
yeah.
all my spot exposure. That's like I'm the worst person to ask because like the only reason I still have that render bag is purely because of like some weird community bag holder mentality where I just can't bring myself to realize that loss after round tripping six figures. So I am officially a bag holder, a render bag holder. If anyone asks, the last question I want to field here is: how do you guys manage winning positions? This is a great one. This is a really good one. Dipta says this is the hardest thing to do for me. So I would love to know what your take on that is, Osbrah.
How do you manage the winning positions?
Yeah.
As we said at the very beginning, and especially as I said at the very beginning, I try to not touch the winning positions. For example, I almost never add, compared to Perdu, for example, I almost never add to a winning positions because it's going to mess with my entry, my average entry. Of course, it's going to change the gains, but it's going to mess with the entry, and I don't like this. So how do I manage the winning position? I just keep them as they are. Things are different with spots. If I have like yeah, exactly this. I could have like said it all like you said for this. I just log off and I don't look at the screens. Absolutely. For spot, it's a bit different because I will have like different layers where I want to add exposure. So I can add to a position, to a winning position for spot, and also to a losing position to average down the entry price. But with perps trading, I just don't touch anything. I just let the position goes. I have, as I said, you have the plan. You know when you should go break even. You know where you're going to take partial profits. You know where you're going to close the trade. You had the plan. Just stick to the plan and don't mess with it. That's how I do it. It's not. I wouldn't say it's something you should do because everyone is different. But it's how I do, and I think it's the less stressful, and it's also reduces the probabilities of doing mistakes with a winning position.
Yeah. Can you guys hear me?
Yep.
Yep.
Oh, perfect. Yeah. I must admit that like in this ranging environment, it's really difficult to not take your profits off the table. I mean, we're humans after all. I'm not a robot. So yes, I can imagine, Dipta, that being in a winning trade, I usually, when I go to sleep in this ranging environment, in this choppy environment, it's way different than how I handle my trades in a full-blown bull market, because at the end of the day, I just close them. If I have a winning trade, at the end of my trading session, I just close them. And even if I think Asia will be bullish, I still close them, even if my plan is to TP to take profit higher. I think I round tripped more in January, February, with holding them into Asia and going to get me break even. Then, like for example, in March when the conditions were kind of the same, and I just closed them. I think it's way better to gain in some to lock in some profits in this ranging environment than to hold them longer than a day. So yeah, in a full blown bull market, I handle my winning trades way more differently, treating them more as swings. While in this choppy environment, I just handle them as scalps and just close them at the end of the day.
Yeah, the only input I will say there is you guys know my setup. I have like 5 screens. When I'm in a trade, I close all of them down except for what I'm immediately working on. If I'm looking at, even if I'm in an altcoin trade, if I'm looking at a BTC chart, I'm constantly going to be thinking, and it actually completely interrupts my workflow as well. When I'm in a trade, and particularly a winning trade, as Dipta was asking about, um, the easiest way to overmanage a trade is just to be staring at the charts all the time. And that's something that I think even the best traders are going to have difficulty with that if they're constantly staring at the price action and overthinking every M1 candle. Of course, it depends. If you're in a scalp, maybe it makes sense to be looking at the charts the entire time. But if you're in like an intra-week swing, there is fucking zero. It's just wasted time and wasted effort if you're going to be staring at charts all day and overthinking the position. And it's an inevitability that you're gonna end up over managing that position, maybe taking some off the table, maybe moving your stop when you shouldn't have. I think the only person you should trust in a trade is the person you were before you entered that trade. You fucking trademark that,
Yeah,
right?
that's a good one. Yeah.
That's
And
that's the
don't
only
I think
that's when your emotions were low, right?
yeah, yeah, exactly. Before you plan the trade, or before you enter the trade, you should be in that mindset, like being in the trade as well. I think the golden tip here is to just not open crypto chat when Hasbira is just opening the 1 minute chart every
Delete.
second of the day. Yeah, delete the crypto chat.
No,
Because
delete what
there's a
Perdu just said. Don't listen to him. Everyone stay active in crypto chat. It's the best place to be.
I think Hasbira, his 1 minute chart on BTC, there's always like a bear market on the 1 minute chart. So I think just focus a bit on the higher time frame if you're in a trade, and I think that's the best way to do it in a winning trade as well. So yeah, but yeah, stay active in crypto chat. Don't listen to me regarding that.
On that. Oh, sorry. XS comes in. Okay, this is definitely the last question we're doing. I don't know if it already asked, but how do you cope with seeing a level being too scared to jump in, and then the price moves exactly at that level in the direction you anticipated? I mean, the issue there, the bit I'm jumping in on is sorry, the bit I'm focusing on is too scared to jump in. What does that mean exactly? If you're too scared to jump in, that indicates to me that maybe you don't have confidence in your system, or maybe there's too much being left up to discretion or too much being left up to chance. If you have a system that says I execute when ABC conditions are met and then ABC conditions are met, it's very simple. You need to fucking execute, right? If you're one of these people that says, "Oh, I got a bad feeling about this, therefore I didn't do it," I mean, you're leaving a lot up to discretion there, and that could end up with you leaving money on the table. I think part of establishing or part of creating a profitable trading system is knowing when you should be sticking to the rules of that trading system, and when sticking to the rules and deviating from the rules it makes sense to do so. So I think that, yeah, I think that just comes down to self-confidence, confidence in your system, confidence in the
Yeah,
profitability of your system, and that only comes with time, right?
yeah, exactly. Yeah.
Osbrah?
Yeah, I wanted to say excess. I cannot add charts anymore on the tracker when I enter a trade. Please fix. Nah, like exactly what you said. And this is something we discussed a lot during this stream. If you have a system and you trust your system, then you shouldn't be scared to begin with taking a trade. But if it helps, then as I do sometimes, and especially after losing streak, once again reduce the risk and like risk an amount of money that is not even going to bother you like throwing away. So just do like that if it can helps. But yeah, if it's part of your system and your system has been proven to work, then just take the trade, mate.
Yeah, definitely.
And on
And
that
otherwise, you're not.
bombshell, oh, sorry,
Yeah,
go on, Purdue.
yeah. Otherwise, you're just not in the right mindset to trade. If you're afraid of losing, that's already a big part of being in a trade or entering a trade. So yeah.
Yeah, and on that bombshell, I think we're going to call it there. We ran slightly over time, but that's okay. It was worth it, hopefully, for you guys. And yeah, massive, massive shout out to Perdu and Osbrah for running this session to such a high standard. Hopefully, you guys got something from this. I know that I did. Hopefully, you were the same. Like I mentioned at the start of the stream, we're going to be running these every month from here on in. Sometime later this month, I'll put a post up in announcements. It'll probably be towards the end of the month. And I will just look for feedback on, sorry, maybe not feedback on this session, but more feedback from you guys with regards to what you'd like to see on the next session. So, as I said, these sessions are tailor made around you guys. We want to address your strengths and weaknesses. We want to address any questions that you might have about psychology, emotional management, tilt, those kind of things. So, I mean, it really is up to you guys in terms of what the content of these sessions is going to be. So, yeah, thank you massively for joining. As I said, we will be posting later in the month looking for ideas for the next session, and we will hopefully see you then. Next session will probably be in 3 weeks. I think we're going to try and run these maybe towards the start of the month rather than we're on the 9th now. So yeah, it'll be probably towards more like the start of the month, maybe start of what are we now? May. Jesus Christ, time is flying. Thank you again to Osbrah and Perdu, and thank you guys for joining. We will see you on the next one. Peace out, Girl Scouts. Love
Thanks,
you. Bye.
everyone.